Are rates and home prices dropping in the second half of 2026? Stay tuned. Welcome back to the BS Real Estate Show, where we talk real, buying and selling real estate, that is. Having navigated this industry for over 28 years since getting licensed in 1998, I think I've seen every type of market shift imaginable. There have been some humdingers through the years. Today we're cutting through the dramatic headlines and looking at the actual data for the second half of 2026, so you know exactly what to expect. Many people are asking me, are mortgage rates finally going to come down? And what about home prices? Are they going to drop too? These are the two biggest questions I'm hearing right now, so let's jump right in. Let's tackle mortgage rates first. A lot of people are sitting on the sidelines, holding their breath for a massive rate drop. But let's look at what the top economic forecasters are actually saying. As you can see from the latest projections from Fannie Mae, MBA, and NAR, rates are expected to stay relatively stable as we move through the rest of the year. So while we could see rates ease a little, possibly helped by falling oil prices, no one is projecting a sudden dramatic drop. A good rule of thumb is that rates tend to jump up quickly and then trickle back down slowly. So if rates are staying fairly steady, what about home prices? We've seen inventory rise for 4 straight years now, and homes are definitely taking a little longer to sell. Naturally, people are asking if that means prices are about to drop or even a crash. But take a look at this slide. The major forecasters are still calling for home price growth in 2026. The projections range from just 0.6% on the low end to 4% on the high end, with the average setting about 2.3% growth. Now, that doesn't mean every home in every neighborhood is going to go up by exactly 2.3%. Real estate is local, and some areas or price ranges may perform differently than others. But the big picture here is none of these forecasts are predicting a major national decline in home prices. So yes, the market is shifting, buyers have more choices, homes may take longer to sell, and sellers have to be more realistic on pricing. But based on these forecasts, we're looking at a slower, more moderate price growth, not a housing crash. Right now, there are 3 main forces reshaping today's real estate market: record inventory growth, shifting prices, and longer days on market. But here's the reality check. A shifting market is not a crashing market. If you're waiting for a massive price drop or a magical return to 3% interest rates, you could be waiting a very long time while homes just continue to appreciate. If you want to know exactly how these national trends translate to your local neighborhood, reach out to me. We can sit down and run some numbers for your specific situation. Hit that subscribe button, and I'll see you in the next episode. Until next time, keep dreaming big and aiming high.